Almost $800 million liquidated from degens in the crypto market over the last 24 hours. Last week, Bitcoin saw record inflows. Everyone's talking about Greenland, yet silver continues to rise. We're going to unpack it all with guest Lawrence Lepard on Macro Monday. Let's go.
Let's go.
Well, let's get to it. Thanks for joining us. Do you like Lawrence or Larry?
No, I'm Larry to all you guys.
That's what I thought. But being a major book author with
hardly
it's important to show respect from time to time. Mike, it's great that you're there. I guess the office is closed today for MLK Day. You can hear us, right?
I don't know. We can't hear Mike.
Good morning. Hello. It's day off today.
So obviously no morning meeting today. So let's I don't know where we want to start. Do we want to start with what's going on in the precious metals world? Do we want to start with the continuing deficits, all the other crap? Do we want to talk about Greenland? Where do you want to go, Larry? You're the guest, so why don't you start this?
Well, I don't know. I mean, we probably should talk the precious metals. I mean, if you kind of want to look at a market where there's a lot of stuff going on and a lot of debate about what it is, that's probably the top, and that's an area I know a little bit about, so I can comment on it. I'll give my perspective from what I've seen, and then you guys can react. I'd like to know what Mike thinks too. I see it as the moves in gold and silver are really quite historic. I mean, kind of stunning. Silver up 150+% last year, gold up 60%, and they seem to not be relenting. I mean, this morning gold was up another 70 or 80, silver another $3. I mean. And I know a lot of people think, well, this looks like a bubble. It's the same as the Hunt brothers and same as 2011. It's going to collapse. It's a parabola. And I don't really see it that way. I see it as actually it's funny, people call this the monetary debasement trade. And I get anger. I react to that with, it's not a trade, guys. It's a monetary debasement secular trend that's going to last for decades. And so, I had some Bitcoin friends saying, hey, should I short silver? It seems awfully overextended. And my reaction was, boy, you ought to be careful because you don't really know where the top is, and what's really going on. And this is true. And the prices would not be doing what they're doing if this was not a fact, is that there's a scramble for physical silver. You can see the deliveries that are taken off of the COMEX and how they've grown this past year. And then you can see the deliveries taken out of London, same story. They're large. I don't have the numbers right in front of me, but you can see the premiums people are paying overseas. I mean, the silver price in China and the silver price in Dubai are substantially higher than the COMEX price. And I mean, like 10%, 8 to 10% higher. And so this to me indicates a real tightness in the silver market. Now, is it going to go on forever? I don't know. But I do know that silver was suppressed for a long, long time. And that 50 was a top that held for, 40, 50 years almost. And when you break through a top that's been held for that many years, you don't just go up 50%. You can go up a lot. And that's kind of the process we're in. And to me, I mean, both of you, I think, will agree that this is all occurring against the backdrop of, huge monetary debasement. It only looks like it's going to get worse. I mean, the most notable thing I've focused on is Trump's aggressiveness in so many areas, and you can debate, the good and the bad of that. And I think there is some good and there's some bad. But one thing's for sure is none of this is free. He said, the defense budget has got to go from $1 trillion to $1.5 trillion. Well, okay, where's that going to come from? And I think we all know the answer: the printing press. And so I think that's what the metals are reacting to. So I'll lead off with that and then let Mike weigh in.
I mean, I just. It's funny when you watch the news flow. It's almost like if you watch the news, that there's two news flows. They're equally insane, and I think most of the actual rational people have no idea what the hell's going on. It's crazy. I mean, Scott had a post a week ago saying, how could if you showed the same exact video to 50 million people, 25 million will be definitive that someone in the government murdered another human being, and 25 million people will say that there was a crazy person trying to kill a law enforcement officer and he reacted in self-defense.
Exactly.
And
Yeah,
and
that's
and
a perfect
that
litmus test. Yeah.
but here's the problem. One, irrational people, if you stripped it out and you tried to talk to people without their dopamine levels going, you just tried to talk to people analytically, what you'd end up with is if the Trump name had nothing to do with it, if all you were talking about was just abstract, and we did this before we got to this hyper politicized era, and you said, hey, should people be trying to obstruct law enforcement from getting rid of or abducting criminals? And the answer is, and what would happen if you did that? You know the answer, and pretty much everyone would say, well, that would be bad. And on the other hand, if you said to people, should law enforcement officers be stopping people to ask them for their papers without any probable cause, what would that be reasonable, or would it ever? And everyone, and literally everybody, would agree that neither of these things make sense. Yet that's where we are now. Why do I mention this? I mention this because what is the dollar? The dollar is a piece of paper backed by what? Full faith and credit of the United States government. What happens when the majority of people, and we are way past the majority, have no respect for the government or fear what the government could be? Whether if you're a Republican, you're terrified of a President AOC or a President Newsom, and you think the whole thing's going to be a house of cards. If you're a Democrat, you're terrified that President Trump, President, whoever, Vance, is going to have jackbooted thugs knocking down your door. And all of this is a wavering of confidence. And by the way, the same thing is happening throughout Western Europe. I mean, UK is even a bigger dumpster fire, etc. The entire West has a lack of confidence. And so all of that, contributes. So that's the backdrop. Now, that all said, we still have to trade this stuff, but and people are so without giving anything to do about what's happening in the actual markets, I figured I'd let you go first, Mike, but you dropped off. So that's why I was filling the space. But that backdrop matters. So, Mike, look, here we are. We've been talking about silver since it first peaked its head above 70. We had the CME do what it normally would do to break the bubble. It obviously didn't work because we're now $13 above where it was with the CME first hiked margin requirements and then did it again. What do you think is going on? What are your people talking about? Can you hear us?
I appreciate the way you started off, Dave. You can't hear me?
Yes, you're
able to hear me now.
Yeah.
Yeah, that's why I hopped off, because I had to reset my stream. But everything you described to me describes an environment of discombobulation, and the key thing that stands out is stock market volatility is too low for that environment. And one thing that I heard already this morning on TV is the first person to say buy the dip. I love that. Next quotes we should be waiting to hear is healthy correction in the stock market. We're so overdue for that. And the bottom line is what we start out with, Larry, is we have the metals gone parabolic. And most notably led by silver. Silver is the devil's metal for a reason. So first, Dave, let's have some fun. Let's start out with the wager. I will short to you silver right now, $1 worth at 93, and I'll bet to you by a year from now, the price will be lower. The reason I say that is I'm just pointing out what happens when people say, oh, you're not focused on the fundamentals. What was a deficit in all the metals now, within a year or even less, will shift to a surplus. It's just a matter of time. Because what you have is supply, demand, price model, and price just went parabolic. To not shift your models to look forward from a deficit to a surplus would be silly. History shows that way. So people like us who've had rocks sitting in their accounts forever, and finally they're giving you some major oomph, you lighten up. I don't say short. Now I'm willing to suggest a short in copper, because I think it reached a pretty good level. And for copper to stay above $6 a pound or $13,000 a ton is a major statement for demand pull global economic growth. And I think it's responsible to be kind of short against that for a normal 1/3 correction. I'm willing to say about Bitcoin, because Bitcoin and all the cryptos have rolled over, 200-day moving average, just the facts. They rolled over. We've had beginning of the year euphoria. And as my point, the key focus, I think, for this year is volatility will go up in the stock market. You should be seeking opportunities to take on good risk-adjusted positions. And the only opportunities so far have been, I think, risk-reward wise to me so far is to sell a little Bitcoin in that rally, sell a little bit of copper in that rally. And it's not a trade, it's part of the macro. If those trades work, the whole thing starts tilting lower for a normal correction, which I think it's the time for in the stock market this year. Maybe down 10%. it's a shocker to say that, but what emboldens me to say that is what's happening in precious metals. We have never had gold and all the precious metals, but most of the gold rally at this velocity with stock market volatility staying this low. So there's the indicators. I look at it, it's going to be a matter of time. And now we have this completely emboldened president, as you can see, has some, I'll say this delicately, some psychopathic tendencies. And he's got a lot of psychopaths following him, who's going to be emboldened. There's only one key force that'll push him, I think, back. First, midterms. He's got to hurry up before the midterms. That's probably what's happening in Greenland. And the stock market. If the stock market drops 10, 20%, he'll lighten up on all his policies. I shouldn't say if, it's just when. And I think that's what precious metals are figuring out. So I look at that, the ounces of gold equal to an S&P 500 now is right about 1.49. It's broken below that high that was set in 1929 in September, 1.54. That's scary stuff. And so for now, as a macro strategist, I look at this market as a tremendous trading environment. As long as you don't come on overweight long and be offset right away. And I think this environment so far, the only T opportunities I see so far this year is kind of fading that euphoria at the beginning of the year. Sell little risk assets like Bitcoin and copper and make them prove you wrong. If they prove you wrong, it's a different environment. If they keep tickling down from these resistances, to me, that's the dominoes falling in for typical post-deflationary, post-inflation deflationary cycle, which I think is starting in gold. So warned us that last year. Bitcoin, crypto's peaking, warned us. And so far, I'm just going on with those flows and make them prove me wrong.
So I want to pick on two of the threads before I unleash Larry, because there's something in there that I think that I've seen Larry use various four-letter words, expletives.
No.
No, not here.
A lot of what Mike said.
Two things I want to say. First, as far as the bet, I don't want to make a silver straight bet, although I think I'd win that one. What I will say is silver relative to gold will be higher. And I think that there's a lot of reasons for that. And I keep saying this before, but if you look at the 70s, when all this shit started, when Nixon closed the gold window, silver to gold in the decade averaged around 35, and we're still in the 50s, which tells me silver has farther to run than gold does. I do think that there's a reasonable shot. I've said it before. I think gold will bang against the 5,000 level, probably fail there the first time. I don't know where it goes to. I think when you talk about these things, the only thing that really matters, and this is where Larry, I want to go in, is the denominators. Like, what are you saying? What you're really saying isn't necessarily is in the case of gold, is gold going higher or is the dollar going lower? Or in fact, are all fiat currencies going lower because governments are just printing hysterically? When you talk about Greenland, I mean, that the one thing I want to say is it is not psychotic if people tell you, if your entire cabinet is basically saying that the most important thing that China is holding over our head like a hammer every single day in the geopolitical, I don't want to call it war because it's a soft war, but in the geopolitical power struggle, is rare earths, and the largest deposits of rare earths on the planet are in Greenland, that the United States thinks it is massively important for us to control that and not for it to fall under Chinese control. That is what he's being told. Now, would I do it the way he's doing it? Absolutely not. I think there are better ways to handle it, but that is the backdrop. And make no mistake, that is literally, Trump, it basically says has two modes: forwards and stop. Maybe there's not a whole lot of backward. There's not a whole lot of side to side. And so he's basically saying, listen, this is what we want. So, when we call it psychotic or deranged, I don't know. I would call it, the one way you could call it is incredibly straightforward. I don't think that's particularly great in geopolitics, but Greenland is exceedingly important for the next century in terms of getting rare earths. And that's what it's about. And so, what all the other stuff doesn't matter. I mean, you can, you talk about NATO and blah, blah, blah. I mean, NATO needs us more than we need them. That's just reality. And you can't get around that. And so you could throw a hissy fit like a lot of the people are in politics, but frankly, that's not what it's about. But let's talk about gold and silver for a heartbeat. Silver's in structural deficit. I just looked it up. With all the plans that are announced, assuming every single one of the miners and all the smelters that are being built come online in 2026, it's still going to end the year in structural deficit. Maybe by 2028, we could catch up, possibly, but there's no one who's projecting that. And so the question when you talk about it is, if the smelters are running full out and they're pretty damn close to it, then even if I turn around and I hand them my pre-64 silver that I have sitting in 2 different places, 3 different places actually, and I bring it all in, will that matter? Well, all I could tell you is this: 2 pieces of anecdotes. Anecdote number 1 is, if you at the U.S. Mint obviously doesn't think they're going to have enough, because they can't sell enough of it, and the premium that they are selling silver at is off the freaking charts. I've never seen anything like this before. I'm wondering, should I go open an eBay store for my monster boxes for the stuff that start selling
you get a premium.
tubes of silver eagles? Should I? I mean, the answer is no, because I told you I think silver is going higher. But the truth is, it's not a bad idea. That premium might make a whole lot of sense. But the other thing is, there's way more ads. I once, a few weeks ago, actually asked for a quote from APMEX, what they would call it, to buy a small amount of silver. And they gave me a shitty quote, and I told them basically to go jump in a lake, because they wanted me to sell it to them at a discount, and I told them to go to hell. Now, I have since gotten 3 different outfits. I'm not sure how they got it, but it's the internet. So, we know where all the product. And now I get texts, I get emails, I get phone calls. Hey, do you want to sell silver? We'll offer you this, that, and the other thing from 3 different outfits. So it is not the same as what happened when gold first made its run. The first couple times gold made its run, Mike, we all saw it. Cash for gold was all you saw on CNBC and whatnot. That's not what's happening now, right? That is what's happening. They're advertising it, and it's not the other way around. So we'll see. Anyway, I've said a lot for you to unpack, Larry. Obviously, the denominator is what I always say.
Yeah. Well, let me just react to a couple of things both of you said. First of all, Dave, yes, the fourth turn. We are in the fourth turning, and we know it because everyone's screaming at everyone else. And this is what happens when you break the money and you make the system unfair. Everyone gets really tribal and gets pissed off, and it's awful. It's not what this country was all about for so many years. It's gotten really, really bad. And I think it really comes down to just a simple issue, which is the loss of trust in our institutions and the rules of society. And it's because we've watched government and so many institutions abuse our trust, and just case after case. The vaccines are effective, the vaccines are safe. The list is as long as our arm. And so thank God for the internet. Thank God for people's ability to broadcast the truth and people's ability to discover the truth by doing their own research. People are pushing back, and rightfully so. Mike, I agree with you. The stock market is an enormous bubble. And I also agree with you. There will be a time when the price of silver will come down, when there'll be a supply response. I would just add, and this dovetails a little with what Dave said, it's unbelievably hard to start producing silver from scratch. We've underinvested for 20 years in this industry, particularly since 2011. The CapEx going into this, Tavi Costa's got some great charts on it. The CapEx going into the silver industry has been completely starved. And, you can actually see Mexico and Peru, which are 2 of the biggest American producers, or, the American continent producers of silver, have seen their production decline substantially over the last 10, 15 years. And so it's going to take a lot of time, from the time when you find a deposit to the time you have silver coming out of the door, that's 10 to 15 years. So, at the margin, everybody who's got a mine operating, they'll try and, they'll run it 3 shifts. They'll, maybe drill a bit more. They'll add some capacity. Don't get me wrong. Supply will go up, but not as quick as, a lot of people think. And so I think it's it's a mug's game to say, how high is silver going to go? If you want my opinion, I think it's going to go to about $500 an ounce on this cycle. So, if you're short it, good luck. And I get there because I think gold's going to go to about $10,000 an ounce. And I think you're going to have a 20-to-1, gold to silver ratio, which is which you were alluding to earlier, Dave, that silver is increasing vis-a-vis gold. And, and everybody listening to this probably thinks I'm nuts and probably thinks, how can those numbers possibly be right? And the only thing I would say is it's because of all the paper silver that got created. I mean, it's really amazing to me. You can go and look at the exchanges, and we mine about 800 million ounces of silver a year. The world, that's the entire world mines about it. And, we get scrap silver equal to about another 200 million ounces. And that still leaves us in a deficit because we're using about 1.1 billion ounces. And, we're running out of grandma's tea sets to melt down. That's the scrap silver. Right? And I know that because I go to my local coin dealer and he's got tea sets stacked up. And I think he probably pays grandma 50 cents on the dollar. And then he sends it to a smelter and they pay him 70 cents on the dollar or whatever for the market price. But I guess the point I'm trying to make is, silver is tight, and I don't think anybody really knows how high it can go. And I'm not suggesting you buy it here, and I'm not suggesting it's a lock that it goes to 500, but I think it's a lock that it goes to 100. Well, a couple of things I will say. We will never see 50 again, in my opinion. Never. 50 is long gone. We broke through it. We could correct back to just above 50. That's not unusual in any bull market, as you know, Mike. You get a breakout, somebody correct back, and you test the breakout. But I think we're going to live in a new reality where probably 100 is going to be the low end, and I don't know what the high end is going to be. So, and that's just because of the supply, demand deficit. But back to the paper silver, I want to make a point here. So we mine 800 million ounces. So there are exchanges where you can see, like the London Met, they trade 800 million ounces of silver in 3 hours. There are days when they trade twice the annual silver production. Now, what that tells you is that that's a lot of paper silver. I mean, there are a lot of derivatives contracts betting on the price of silver, that if somebody on the other side who thought they bought a contract and said, great, give it to me, it's been estimated there are 4 or 5 times annual supply in potential derivative demand. And I think it could be even larger than that. So I don't know. I mean, I guess what I would say is I think the shorts are playing with fire here. And I actually have gone further on Twitter. I said, and a lot of people criticized me for making this statement because they thought it was hyperbolic, but I said, wouldn't it be ironic if silver is the Lehman Brothers of this cycle? As we all know, Lehman Brothers kind of was what truly made the 2008 go critical. And, what if there are some huge banks that, are on the wrong side of the silver trade and that will be wiped out, and their governments will be forced to either bail them out, close them out, or do force majeure? I mean, and we've seen force majeure, right? In 2022, the nickel market went up 2 or 3x, in the span of a week. And, the LME, the London Metals Exchange, was on the wrong side of it. And there were $12 billion of losses among nickel dealers in London, people who were short it, and, people had cornered it and had pushed it up. And what did the LME do? They canceled the trades. They literally canceled the trades and said, sorry, yeah, you bought it and you should have 12 billion of gains, but we're not giving it to you. Those don't count. And so, you've got the US government saying it's a strategic mineral. You've got, China competing for it. We're competing for it. We're all now in this great power competition where there's China, us, and Russia all competing for our spheres of the world. I mean, one of the things I actually worry about is one day the government wakes up and does a 6102 on silver and says, we need this. We need it for weapons. We need it for other things. SLV holders, you're in you're in luck. We're going to send you cash at the last trade of SLV, and all that silver that SLV holds, that now belongs to the U.S. government. It's a strategic stockpile. So, there's a lot of stuff going on here that makes this not an easy call as to where silver is going to go next. And I would take your $1 bet on lower than 91 in a year. I don't think, you could be right. There could be a pullback, but I think that, I really think that people who were thinking of shorting this, it'd be like shorting VW or shorting GameStop. You just don't know how, in a short squeeze, you don't know where the top is, I guess is the point.
So, Mike, you want to respond?
But prudent investors who are on top of it.
Well, I agree with
so
that.
So you don't, but prudent investors who are on top of what
having said all of that, I will add, I have a lot of silver, and I'm starting to sell some of it. I am starting to take profits. And this is silver that was bought at 4, 6, 8,
exactly.
10. Yeah. Because you don't know what the top is, you don't know what the bottom
exactly.
is. And yeah, and so yeah,
Guilty.
I'm not a buyer of silver here, although I think it'll go higher. and I've got so much of it that I'm probably a marginal seller of it. But this is, I treat this the way I treat mining stocks. When I get up 5 to 10x, I start selling them, even if I think they're going up 20x, because you have to as a prudent manager of capital. So
prudent manager. So that's one thing I think our audience would prefer if we disagree, but we all agree on this. If you've been saying those kind of same bullish things that you said for over a decade, which I have, and metals, you're supposed to lighten. The thing about silver that's changed, it's 60% industrial demand now. It's no longer the old silver. It's much more in a bucket of copper industrial metals. And never underestimate Adam Smith's invisible hand. I did enjoy whipping that book out back in 2022 when people were calling for crude oil to stay above $100 a barrel and corn to stay above $8.
That's true.
Like, no, it's the opposite. Basically, right? Silver is similar to crypto was a year ago. And this could be an enduring peak for decades if history is a guide. So don't underestimate Adam Smith. You're supposed to take all those little deficit things you read and heard about when you bought it at 28 at the last year, which is lower than the peak in 1979, and say, thank you, what you're doing, you lighten up and be very 50% corrections, 10% days in silver should be happening soon. So what's kind of piggyback from there? It's the whole metal sector. We launched the Bloomberg Metals Index in 2018. It's the best place to invest, but now it's like gone up too much. And then you'll bring on that stuff. All the things you're saying, there's always good reasons for rallies. Then you have to look forward. But I think what you said, Larry, is the prudent thing. Those of us who've been long it forever, lighten up. But here's a key thing I want to point out. I got completely wrong last year. I did not think the gold to silver ratio would drop below 80. It's at 50 right now. So Dave, I'll take the other side of that trade. There's one key thing to remember about silver. It's more, like I mentioned, now more industrial than it's ever been. Is the bottom line for silver to outperform gold? The U.S. stock market has to go up, almost always historically, and volatility has to stay low. So you see my problem there. I think that ratio is more likely to go back towards 80. It's at 50 now, then head towards 20.
Well,
partly because I'm bullish on the stock market volatility going to 30.
So let's unpack that for a second. So the silver is an industrial metal. Check. What industries? That's the key. And so, we have a world where we have the administration, who still has 3 years, wants to goose the defense budget. Well, what are the industries that need silver? Well, it's pretty straightforward. Number one with a bullet is defense. Some crazy amount of silver goes into every Tomahawk missile, et cetera, et cetera. Number two is electronics. And number three is renewable power. Right. So, battery production and anodes, et cetera, all your AI data centers, the amount of silver that goes into all of this stuff, crazy amounts. The reason we're in a structural deficit and the reason that we can't catch up is because the newer industries are the ones that's demanding silver. It's the best electrical conductor.
Well, you haven't really even mentioned, Dave. I mean, the two data points that I think are very interesting. One is that solar. I mean, you really can't. I mean, the Chinese have talked about using copper and solar panels, but they haven't proven they can do it yet. Solar panels need a lot of silver, and if Chinese solar demand continues to grow the way it has been growing historically, China would consume like 60% of annual production in 10 years.
Right.
So that's one. And the more important, the other one that's really kind of on the horizon but could be huge, is Toshiba, Samsung. These guys have come up with an automobile battery that requires silver, that could charge rapidly and have a lot more mileage. And I mean, and so, and it's going to need a lot of silver per battery. And so that's a source of demand. Now, they're not commercial with that yet, so that's a little further out. But to that point, here's an interesting data point. Samsung went out, one of the companies I'm invested in, Samsung went out and at market rates put a $10 million investment. It's a silver developer. They're going to have a mine that'll be operating soon. So we will invest $10 million in you, privately locked up at today's market value. And in exchange, you've got to agree to sell all your silver at market to us for X number of years. That's interesting. Companies do that when they're worried about supply. And so it's a real, we're not making this up. I mean, this is a real supply demand issue. And is there some froth in it? Sure. I mean, is there some speculation in it? Sure. But there's also a structural thing, and I agree with you, Mike. I mean, the one that's the most interesting to me, and it's kind of an enigma. I mean, the stock market is way overvalued, and the stock market should correct this year. I think there's a likelihood it will correct this year, unless Trump, quote unquote, runs it hot. And and he's mentioned that he intends to run it hot. I mean, and they know that if the stock market turns down, deficits go up, he doesn't get reelected, all of the above. And this is why he's trying to get so much control in the Fed. He wants people in there that he knows will do things that will help him with his agenda, which is to push the stock market up. And, I don't know how he's going to do it, but I wouldn't bet against, given how aggressive he is, I wouldn't bet against him doing it. And I wouldn't bet against the stock market going up. But what I take away from that is if that's the case and he, quote unquote, runs it hot, there's no way to run it hot without having a lot of inflation, right? I mean, you've got to have money to feed the beast, and more
Which
money.
means you're not going to get elected.
Yeah, exactly.
Well, it's exactly what's going to happen. I mean, look, there's only right now, it doesn't matter. If people talk about, well, he needs to do this for the news. The reality is, from a news perspective, from the things that might be, coming to a head between now and say the summer, because that's, by September, the midterms are more or less sealed. The things that are coming to a head are actually quite a bit of it is positive, but it won't matter. If people look at their standard of living and say, my cost of food and X and Y, food, medical care, etc., what I care about is going up and my salaries are not, the Democrats win. We get 2 years of impeachment, this and this drama, that, and nothing happens in Congress. And effectively everything grinds to a halt. Yeah. Now, as macro analysts, we have to ask ourselves a simple question. What does Wall Street, what does the stock market love more than anything else in politics? They love gridlock. That's what they love. And we are, and look, personally, I don't want to see gridlock as a human being. I think that there are certain things that need to happen, right. But the God's honest truth, and we all know this goes back years, Mike, is gridlock markets tend to like. And so the levers that Trump will have going out 3 years, for the full 3 years are the people he's appointed to agencies, what they can do, and the next Fed chair and the next what's going on there. That's it, because you're not going to get legislation if the Democrats win Congress, because there is no such thing as bipartisan anymore, because you get people, you literally had 100% of all the Democrats willing to say they don't want voter ID. Yet 85% of Americans want it. So there's no way, if you can't get bipartisan agreement on something that 85% of America wants, you're not getting bipartisan agreement on anything, which means you're going to get nothing done. So we're going to get gridlock. That is, anything other than gridlock will be a massive surprise to the market. Yeah. We all have to agree on that, right? Anyone
I think that's right.
And so that's what you're going to see. So, we keep talking. The reason I wanted to start with silver is because I think that it's going up for two reasons. One is what we said, which is just the industrial demand, but it's not just industrial, it's the new industries. It's what's actually happening in this fourth turning. What's happening is automation is increasing. Yet, unlike oil, we have yet to come up with a better way of mining silver.
Correct.
That's the difference. Whereas with oil, and the reason that oil has tended to, perform much more like, oil is $60 a barrel. And, it's funny. I just finished watching season, whatever it was, 2 of Landman, which is one of my favorite shows on TV. I just love the characters in that. Billy Bob Thornton is I just love the characters on that show.
Billy Bob's a great actor.
He's a great actor, but the writing is superb. But what is that oil technology continues to improve. We continue to be able to drive down the cost of it. And Mike, you've talked about this ad nauseum. And so oil is a different commodity than something like silver, which we really haven't improved our ability to get silver out of the ground and turn it into it. So as a result, the denominator, i.e. the number of dollars in existence, the number of euros in existence, yen in existence, etc., all continues to go up. So in those terms, obviously the price has much more support. And so you can't look back on a chart without factoring for the amount of global money supply in existence. That's where you and I differ more than anything else. Now, speaking of existence of more money supply, I mean, Larry, I know you know a little bit about that. I mean, how does that impact your way of looking at all markets? And
Well, I mean, that's the debasement trade, right? And as we all know, the big news there is that the Fed pivoted in December and started QE again, started printing money again, $40 billion a month. They call it reserve management, but it's really QE or whatever. And I thought it was interesting the way they did it. They floated a few trial balloons. They stopped QT in late October, late October, I guess it was. And then they floated a few trial balloons and said, maybe we'll do 25 billion of QE and maybe it'll start in 2026. And then December 2nd rolled around and bang, they did 40 billion starting in 2 days. So telling you that they really actually needed it, the reserves were too tight. And I've got some charts that show that. I've talked about them in other podcasts. And basically, the machine we've got, the monetary system we've got, you have to continually grow reserves, grow M2, or else the debt collapses, and that looks like 1929, and that's unpleasant. Nobody wants to have that happen. And so, I wrote a book called The Big Print. It's really the third big print. The first one was 08. Bernanke printed 3 trillion over 3-4 years. The second one was Powell in 2020, where he did 5 trillion in 18 months, and I think another one's coming. And I think we just saw them, kind of capitulate. I mean, it's a certainty that in December, they did not want to do what they're doing, this reserve management, this stopping QT, all this stuff. They didn't want to do that. They're above their inflation mandate target. I don't know, depends on how you measure it. And of course, all the measures stink, but they're clearly at 2.7 to 3, and their target is 2. I mean, it should be 0. And so they turned around and started printing again. And my sense is, all the stuff Trump's talking about, I mean, none of it's free. Defense to 1.5 trillion. Okay, you can do that, but where's the 500 billion, the extra 500 billion going to come from? So, I think we're just, the printer is going to get turned on. Lynn Alden and I have kind of jokingly argued on Twitter, and she's like, well, it's more kind of a gradual print right now. And she's right. I mean, 440 billion a month is 480 a year. That's not the trillions that happened in the last 2 big ones, but I feel like mathematically the next big one's coming. And I feel like it's coming within, I think it'll happen this year actually because of the midterms, but I'd be shocked if it doesn't happen in a year and a half. I mean, and I think it'll happen because of something, and I'd be curious Mike's view on this. It'll happen because of the bond market. And the other little alarm, that's sounding in the bond market, I tweeted it out this morning, is the yield on the Japanese 10-year looks like a rocket launch. And so that tells me that people are, not too happy with holding long Japanese paper, and how long until that leaks into our long paper. I mean, to me, it's amazing to me that anyone would buy a US 10-year bond at 4% when we're clearly debasing the money at a much higher rate.
Yeah, it's funny you said that, Mike. You should talk, but I wanted to
go to that, Mike. I'm
I wanted to, I don't know if Ryan can put up the screen, but I was just looking at the Japanese bond yield, and boy, does that chart. I mean, that's 6 months. You go to a year. I mean, you just look at that. I mean, that is insane. I mean, if you go back, breaking above 160. I mean, we were talking on this show, Mike, remember, about the carry trade, about, well, as long as it doesn't break above 160, no one's going to care. And now you look at what it's done since November. I mean, I mean,
this is an alarm.
I don't know why people aren't talking more about it, but it's a very big move. I mean,
it's an alarm signal.
Because people like us who traded these things almost 30 years ago have been waiting for this for 3 decades. Honestly, I gave up on it. Just like silver. I was almost ready to sell all silver last year because it's like, about time. But exactly. So I think that it's happened, but I want to address what you're saying, Larry. I think it's really important to remember the first part of a binary model for a big print. Risk assets have to go down a lot. The problem is we've already been through, they pointed out this will be the next one. And to me, that's what gold's figured out. Now, silver maybe too, but silver's a speculative risk asset. It's called the devil's metal for a reason. So to me, those are the signals that we're seeing from the metals, certainly gold last year. And to look back from the future and say, yeah, that, gold grabbing alpha at the greatest velocity since 1979 didn't matter. Well, it's strange. So I'm looking back from the future and saying, yeah, 2026 was a risk-off year because we were warned, volatility went up, and all risk assets went down except for one thing, treasury bonds and treasury bond prices. And so, yeah, I've been taking the pain on that for 3 years. But to reiterate what happens from the pain to the gain, we're seeing the gain in the metals. And Mick retard, as some people call me. I love that. I was expecting gold to break above 2,000 in 2021, particularly when Russia invaded Ukraine in 2022 and 2023. I was Mick retard in gold to go above 2,000 for 3 years. Finally did it. That was the pain. Now we're in the gain. You pointed out the prudent thing to do. You lighten up. We had pain in platinum. I remember Brendan Clifford, I think, of the Platinum Institute. Every time I got his emails, I'm like, yeah, I get it, Brendan. I've been long platinum forever and bullish platinum forever. Finally, it breaks out. The key thing that's happening is the pain I've had in treasuries the most ever, 3 years, completely wrong. But there's one key thing. There's a 10 on a global scale for everything. I look at that treasury bond right now at 4.8 or so percent, almost 5% as a put on the S&P 500 that has positive return, then actually gave you positive return last year despite the stock market going up. So here's my scenario. S&P 500 drops 10% and stays down. Bond yields, which are on a 4 handle, go to 3. Mortgage rates, which are a 5 to 6 handle, go to 4. Crude oil goes to 40. The average gasoline price in this country around 280 goes to 2. All those things that Trump needs and wants will happen. It's one simple little thing. But when you get this expensive in U.S. stock market, you have to understand it is the economy on a global basis. It's all that matters. And like I said, if we drop 10%, it's going to be all that matters. The Fed will be easy real fast. But in this environment with all going up, everybody's going to get 10% gain. I say, yeah. The fun thing this year is to just.
Mike, you're gonna have to do something about your internet.
Yeah, you're breaking up a bit, Mike. Mike, I don't disagree with you. I mean, what you're describing is a deflationary impulse, which would put a bid into the bonds, and I don't disagree that that's a possibility. I mean, if the stock market cracks, and things start going down, the thing is, we're running these record deficits, and everything's completely where it is. It's all messed up right now. And this is with a healthy stock market, right? The last 2 times the stock market cracked, you have all kinds of, spending goes up on social programs, et cetera, and tax revenue goes down. So the deficit gets even worse. And so, my sense is if the stock market cracks, maybe for a brief period, it's a deflationary thing. Very much in March of 2020, the 10-year traded down to like 50 basis points for a few days. Remember that? It was nuts, right? So you can get a deflationary impulse for a brief period of time. But then, of course, we know, since the Fed has vowed to fight deflation, and since they fear it more than anything else, and they don't want to have another 1929, we know what happens. The policy response is, print money full blast, buy everything in sight. We're not going to let that happen, right? And but that is what makes trading this year very tricky, and it's what makes things like Bitcoin as an example. I mean, I love Bitcoin, I love MicroStrategy, but there's a model. I mean, I rated about a 35% chance that we have what you've described, Mike, which is a deflationary impulse, and Bitcoin goes to 60. I mean, if it does, that's an enormous buying opportunity. I mean, I'll be selling gold and silver and backing up the truck, but the point is, we just don't know. I mean, the system is so broken, and the policymakers are so corrupt and stupid, but yet we know certain things that are true, which are they will not let us fall into a long-term deflation like 1929 if they have a printing press available to them. I think that's the bet I'm making.
So let's talk about let's pivot back to talk about Bitcoin, because Mike and I had a poke Mike post on X, and Mike talked about it. So Mike posted again about $10,000 Bitcoin, and my point on that is it's very simple. I'm not saying it can't happen, because God knows if Bitcoin breaks. I mean, if it's literally deciding to go to zero, if all the miners unplug and the network effects go down and it fails, and look, the market is pricing. Let's make no mistake. This price of Bitcoin, the market is pricing very much a non-zero chance that Bitcoin will fail, full stop, and just be a niche product, because otherwise it would be somewhere between 300,000 or 400,000 right now. So clearly the market is pricing that is a real possibility. So anyone who says that it is not, it is. It's a possibility. If you don't believe it's going to happen, then you should be, in it and irresponsibly long, probably. But let's just leave that up for a side. Why do I say that? Well, because in the case of 2022, when we had a significantly lower money supply relative to every asset on the planet, it would be much, much lower, even after forced selling from the largest exchange failure after multiple other failures. They couldn't get Bitcoin to drop below 16,000. So saying it's going to go below that now, 60% below that, is basically saying it's going to fail. And so that's why, I made that point. But the real question is, Bitcoin is trading in this quasi risk asset mode. And I say quasi because lately the correlations are icky. Today, the correlation is high. If you look at the stock futures, people are expecting tomorrow to be a pretty bad day, and Bitcoin is off like a little over 1% or so. So it's more or less exactly in line with the S&P, for where the futures are trading. Still towards the top of its recent range, which was mid 80s to mid 90s. We got a little above it, but people got excited, and what happened? They got wiped out. There was, almost 800 million liquidated in the crypto market. Now, only a third of that was Bitcoin, but it doesn't matter because the animal spirits in the crypto world are very, very much alive. People continue to over leverage, and every time they go for a breakout, they get waxed. And so we look at a market where there's just nothing sustainable, and it's sitting in this distribution mode. What's interesting about Bitcoin in particular is traditional financial types are more and more not putting pinky toes in the water. Now they're putting a few toes in the water, and eventually it'll be feet and more in terms of diversifying that part of the portfolio that might have been in gold or might have been in silver. And so you're seeing more and more in the United States financial types selling metals in order to buy Bitcoin, but over world, the contract for differences market, et cetera, and silver is still dwarfing anything that's happening in crypto. So I look at all this as very interesting. I will continue to say that unless there is a major stock market correction in the first half of the year. Now, in years after strong markets, the March period when people have to sell for taxes can be pretty iffy. Last year we had it iffy because of the tariff tantrum, but that spring you could see that sort of sell off. Could that happen again? Absolutely, it could happen again. Is it going to happen again? I mean, I don't know. I'd say it's probably more like 60% that we'll see. And you said 10%. I mean, a 10% sell off, that's easy. We had more than that last year. I think that could easily happen, particularly if, one of many macro things happen. But the real question is, what does that do to Bitcoin? Last year, it took Bitcoin, they couldn't really get it very far below 80. They got a little into the 70s, and that was it. And at the same time, the fundamentals are different now. Those marginal sellers that came out of the woodwork last year from the long-term holders sold a lot. Yeah. And the people that are buying it are people who have a cost basis where it wouldn't make any sense for them to be selling it now because it's a long-term bet. And so the dynamic is different. Now, that is not the same as the rest of crypto. Okay, I want to be really clear about that. I think Ethereum has a narrative. Bitcoin has a narrative. Some of the larger cryptos have a narrative. A lot of the speculative stuff in crypto will only take off if there's a sustained rally in the majors. And until then, it's a bleed out. And that's what's been going on. And so when you talk about, competitors and all the other stuff, that's how I see it. So that's my mental model. I personally, think that there is a reasonable chance that there'll be a risk asset sell-off at some point. But I think the overall trend is they're running it hot, and they're going to print more money, and, risk assets are going to go higher. And as long as risk assets go higher at the same time that people are diversifying away, I think Bitcoin breaks out to a new all-time high. That's my base case. Now, yeah, Mike, I know you disagree, so I want to give you a chance.
The Bitcoin correlation with the NASDAQ and as a risk-on asset has been fading over time. There were a few days last week where the triple Qs were down and Bitcoin was up, and that 2 days doesn't make a trend. But the point is, it is, in my opinion, it is a neutral reserve currency, and it will become that. And the sentiment in it right now is just absolutely dreadful. I mean, you guys probably saw the New York Times article attacking Saylor, and to me, I mean, we're only 100 and some odd days away from an all-time high of 124. We're still in the 90s. I mean, it's not like this thing's been a disaster, and yet the sentiment, it feels to me, I hang out with a lot of Bitcoin people, and it feels to me they're all, crying in their beer like it's just horrible that it hasn't gone up much quickly. And if you look back at this thing, the best way, I think, Mike, and you would agree with this, having a lot of experience, the best way to evaluate any asset is to look at the long-term history, what the asset's done in the past. And if you look at the long-term history, what Bitcoin's done, you know, it really rewards patience, and it rewards it in a funny way. And just when you're about to give up, that's when it works. And it, you know, it goes up. I mean, let's go back and examine the March 20 example, okay? Because that was the last kind of risk off event and then a big print. And so it's instructive when you're looking at that and you compare it to Bitcoin and gold today. So when Powell pivoted in 2019 because the repo stuff blew out, you know, he stopped tightening, he started loosening, he cut rates, and then COVID came along, and then he really printed and cut rates. Gold went from 1,200 to 2,000, and you know, everybody was happy in gold land. My stocks all went up. It's all good. Bitcoin was just locked in between 5 and 8, just couldn't go anywhere, and it stayed there. And I remember very clearly because I own both. I'm in both communities, and the crypto people were like, well, Bitcoin people were like, what the hell? You know, gold's ripping, our thing's not. And then suddenly, you know, July, August, Bitcoin woke up and bam, it went from 10 to 60. It went up 6x, you know, like really quickly.
Well, let's get it right. It was October.
Okay, far enough. Yeah, thank you.
That was the same year that Paul Tudor Jones made the fastest horse comment.
And how quickly was that time? What was the time frame, Dave, between the 10 and the 60?
Well, so here's what happened. 10 was where it was right below 10 when Paul Tudor Jones said early May of that year. It didn't do a damn thing until mid-October. And then once it started rallying in mid-October, it got to like the 15 range. November, it got to the 20 range. 60 was by the following April, I think, was when it hit it, or March.
So really within 6 months, it did a 6-bagger. And so I believe that's what will happen this time too. I mean, gold is really good at smelling out monetary debasement. It just knows when it's coming, I think. And so here we are, we know it's coming. And when it hits, you know, Bitcoin's going to go from, you know, 80, 90 to 270 or 300, in my opinion. So that's really, you know, the pattern that it's shown in the past. And I think that pattern will continue. But, you know, you've got to have a very long-term perspective on it. And there's never really been an asset like this. I mean, Bitcoin, you know, Mike, you know, very prudently pointed out that silver, we can mine more silver. You know, we've got an algorithmically fixed cap on the amount of Bitcoin. So when people decide they got to have it, we're not creating any more of it. It's perfect in that respect. It's perfectly inelastic, right? Higher price does not create more supply, and that's why it trades in this wild animal-like fashion. And so I fully expect the next top will be 200, 300, 400,000. And by the way, from there it'll correct another 50 or 60% again, come back down into the 170 range or something. I mean, it's like Amazon when it was getting adopted. I mean, you know, it's either Bitcoin's going to the moon, everybody's all pumped up, and crypto bros are driving you nuts, or Bitcoin's dead, and you know it's on its way out. Like, I mean, right now Peter Schiff is out there doing victory laps. Like, see, the bubble's burst. I told you, gold's crushing it, and Bitcoin's going to zero. It's like, okay, Peter, you know, let's give me another year or two. Let's see where we are. You know, so you got to be patient.
Let me look at the simplistic facts of Bitcoin. I've been waiting for the big test for a while. Let's see beta go down and Bitcoin outperform. We did not get the test last year and Bitcoin failed. The whole crypto space failed. Bloomberg Galaxy Crypto Index was down 20% after being up 20%. Starting in the middle of the year, I started putting that index in the year 1929 in the same sentence. I will continue to do that. If you two and everybody's bullish are right, prove it. Let's see it stay above 100,000. I think it's more likely to go to 50 in a normal correction and then move on from that, particularly if we just get like you said, it's such a silly thing to say, oh my gosh, if we get a 10% correction in the stock market. People aren't ready for that. It's the psychology of the space. And let's remember what I loved about Bitcoin is it's so emotional. As an ex-trader, that's the last thing you're supposed to be. Because I mean, I put out comments about all other commodities and I don't get the kind of silly pushback, you know, like Mick Retard doing cryptos, and that's a sign there's a problem here. So now it's failing. The whole space is heading lower. I'm willing to suggest you should be shorted. And prove me wrong. Stop McGlone out.
Well, and being short it for the next 6 months might be the right call, Mike. What I would suggest to you though is if we could
maybe 6 years. I think this is the biggest peak like.
Well, that's where
I think this is a peak like silver did in 1979.
Yeah, see, that's
well. Of course, we got to disagree, or else we're not worth the shot.
Yeah, no, that's right.
But here's what you have against you right now: it's a bear market.
Yeah. Oh, no doubt. But I mean, it's a bear market where we were at an all-time high. You know, only 100 and some odd days ago. I mean, it's not that bad a bear. And in terms of Bitcoin bears, I mean, we've had,
That's usually how they
I mean,
start.
David, we've seen much worse than this. I mean, to be at 90 when the high was 124, this is not really that big a bear. So, but your point's well.
The facts have changed. That's when Bitcoin is a baby.
What's that?
Bitcoin's not a baby now. It's in the space. And it's got horrible performance. I mean, the Bitcoin performance absolutely sucks. Since 2021, high volatility, low performance. Any risk managers allocating to this space is going to say, yeah, so what do you need for it to go up? Well, stock market needs to go up. It used to be leverage beta. It is anymore. Everybody's in this space. And, and it has unlimited. Okay, I have to be careful using this word because Bitcoiners are sensitive and they get overwhelmed. It's competitive. I like to say Bitcoin is like a gaggle of pigeons or geese, and the precious metals are doves. There's just unlimited supply of these. So I'll look at my base case. Dogecoin, we're 2/3 of the way there. It peaked around $60 billion in 2024 when President Trump was elected. It's $20 billion. Once it gets to zero, another third of that flush to zero, then I'll probably turn bullish or see signs of anything but divergent strength other than horrible performance versus beta. I mean, it just sucks now versus NASDAQ. There's no earnings. Just pointing out facts. Almost 5 years now. I pointed that out today. The Bitcoin to gold ratio is flat now for 5 years. I'll take gold, and gold's expensive. So I just look at it as good luck. I mean, the trade's over. The whole cryptocurrency trade is over.
This is a fact you might find hard to believe, Mike, but it's true. In the last 5 years, Bitcoin has outperformed gold. Last 5 years, gold is up compound annually 20%. Bitcoin's up 23% a year. And in the last 5 years, the S&P is up 12%. So they both beat the S&P. So,
Bitcoin to gold ratio is 20 right now. 5 years ago, it was 20.
Yeah, well, it's not quite right. It's actually a little different than that.
It's a fact.
No, it's not. Your data is wrong.
I just pulled the chart up and posted it on X yesterday.
Well, rather than arguing about facts,
and by the way, Bitcoin's about
let's agree to a couple. What we saw, part of this sample size is we've seen twice in Bitcoin's history euphoric rallies where Bitcoin traded dramatically higher than its network strength and all the various user adoption metrics, dramatically. The last one happened to be within this period of time. It happened at the end of 17, beginning in December of 17. It happened again in a double peak in 21, right? It was 21 that it did that. Your 6x rally to 60,000, and then it dropped and then went to 69 and then dropped again and then stayed down. In both of those cases, the network compared to today was, well, in the second case, it was about 1/6 to 1/7, between 1/6 to 1/7 the size in terms of strength, in terms of the amount of hash power that's being thrown at it, the amount of money that's being thrown at it on the network side. So the 2025 quote rally, which was a immediate reprice up from the Trump administration calling the dogs off from Elizabeth Warren's anti-crypto army, did never follow through. It didn't follow through for a host of reasons. I will maintain it has to do with the fourth turning shit we were talking about earlier, which is half the country said, well, Trump likes it, I have to hate it. And that's a very real thing. And we have 3 more years of that. But the question is
just to go back, though,
never got anywhere close to euphoria ever. So
we're going to run out of time. I just want to go back because one thing I feel strongly about in podcasts is we should be dealing with the same set of facts and the truth.
Mm-hmm.
I would suggest everyone go to a site called Case Bitcoin, CASE Bitcoin, all one word.com. And what you will see is, and this guy updates this daily, what you will see is the rolling returns on a compound annual growth rate or on a total growth rate. And yes, Bitcoin, gold beat Bitcoin this year, last year. But on a 5-year basis, Bitcoin's up 180%, gold's up 150. And on a compound, those numbers compounded, Bitcoin's been compounding at 23%.
I'm presenting that on the screen. If Ryan, if you can put it up there, you'll see it. It's right in the middle.
Larry, can I ask you one question?
Yeah.
Larry, can I ask you one question?
Sure.
What's the volatility, average annual volatility of gold versus Bitcoin during that period?
I don't know the answer. It's much
so you don't
lower,
have to answer the question. It's 2 to 3 times. And risk-adjusted, gold or Bitcoin should be up 2 to 3 times gold. That's my point. Is on a risk-adjusted basis, its performance absolutely sucks. You don't allocate. The trade is over. Maybe we'll get a decent dip to buy. And right now, I'm just saying, it looks like it was a rally to sell.
Okay, fair enough. I mean, yeah, if you want to put in the volatility as a measure, I hear your point, and that's valid. But I mean, I think you said that it had crushed it in terms of performance on a 5-year basis, and that's not true. So,
Well, the volatility is
It
interesting.
is. It's I have here. Let me show you the chart. Bitcoin to gold ratio. I just posted on X. It's 20, and exactly on January 21st, 2021, it was about 19.8. It's the same. But it's the risk. That's my point. Is any risk managers look back on this and say, okay, well, how many years now we have poor performance, a higher volatility? It's just you don't allocate to that, something like that.
The only point I'll
and the
make,
back test. So actually, before ETFs was quite.
So here's the thing. So you like to talk about objective truth. So okay, fair. Except for the fact that the amount of buying by people who actually understand that, as opposed to crypto bros, has been remarkably tilted toward Bitcoin. Not because of that, but because of the long-term optionality embedded in Bitcoin. That's just fact, right? You know, if you talk to anybody from the ETF complex, any of the people, whether it's at BlackRock, at Fidelity, or Bitwise, I mean, you know, they'll all tell you because
they're site analysts. Perfect.
You're talking, but that's where the money's
They're talking their books. They're selling products.
that's
well,
a fact. Hey guys, we got to wrap up. It's 10 o'clock and I got to get going, but it was nice to see you, Mike. We'll revisit the silver price in a couple of years, and we'll revisit the Bitcoin price too.
We shall see. Anyway, everyone enjoy the rest of your holiday. And of course, we'll be back next Monday. I think Scott will be back and everything will be back to normal. And so be it.
Okay.
Take care.
Guys. Bye-bye.
Everyone's looking for smarter ways to build their Bitcoin stack. Well, here's one most people overlook. You can earn Bitcoin every single time you spend without ever buying it directly. That's where today's video sponsor, Gemini, comes in. The Gemini credit card gives you instant crypto rewards on every purchase, and there's no annual fee. It's a MasterCard World Elite, so you can use it anywhere MasterCard is accepted. Gas, groceries, travel, all of it. Now here's the breakdown. 4% back on gas, rides, and transit. 3% on dining, 2% on groceries, and 1% on everything else. The best part? You're earning Bitcoin or one of 50 plus other cryptocurrencies automatically deposited to your Gemini account. For me, it's been a really effortless way to build exposure to Bitcoin just by spending like normal and doing the things that I do every day. I've literally earned Bitcoin just from filling up my car with gas. And historically, Bitcoin rewards held for 1 year have appreciated 279% on average. You're not just spending, you're building a portfolio. This is the Gemini credit card. Sleek, straightforward, and one of the easiest ways to turn everyday purchases into long-term value. To get started, look at the link in the description and get $200 in Bitcoin when you spend $3,000 in your first 90 days. Click the link in the description to apply and start earning instantly. See rates and fees in the description for more info.